everybody, Mike Lieberman back with the 10-second interview show. I am back with Dr. Charles Lieberman. Chuck, brand new intro to the show. Pretty snazzy, huh? Look at us. We're high profile now.
I'm impressed.
All right, so we have, for those of you who don't know, I will ask Chuck 5 questions. He has 10 seconds to answer each question. It is a TikTok world. We are a bunch of TikTok dudes. We look like the definition of TikTok dudes. Chuck, with that, right, TikTok could be part of any sort of settlement, trade negotiation, anything with China. My first question to you, right, I guess point out this is coming after a long week for everybody. High highs, low lows in this market where things are swinging around with every tariff headline. Question number 1, Nate, if you could throw up the countdown clock, 10 seconds to answer. Is the United States forming a coalition of countries to sort of create a trade barrier with China? 10 seconds, or trade terms with China. 10 seconds, go.
Well, we would certainly like that, but of course we've also ticked off plenty of the rest of the world with tariffs on them. So putting together a coalition is going to be difficult.
Okay, let's talk about how this was done to begin with. A lot of people, whether it's Ray Dalio or others, have sort of hit the tape recently saying that a reorganization of global trade had to happen. This may not have been the right way to do it, but it needed to be done. Do you agree with that? I mean, I know it's a hard thing to answer in 10 seconds, but what does that mean, and do you agree with it?
I do. We're running massive trade deficits, and it was because we let foreign countries export to the U.S. without restraint, pretty much, and that we didn't do anything about the restraints they put on U.S. exports. So that needs to be rectified. The way Trump has gone about it has ticked everybody off, and that's a mistake. We could have built a coalition. We didn't do that. It's a problem.
Is it possible that other countries move closer to China, or, I guess it's China, there isn't really anywhere else to go, because they no longer see the U.S. as a friendly place to do business, right? Whether they were dumping treasuries or whatnot, I guess, do you move to China, A, and B, first two-part question we've ever had, do you move closer to China, A, and B, is the United States still a place that the world views as safe to do business?
Well, I don't think the world moves a lot closer to China. China is not exactly a great partner. They've demonstrated that in a lot of ways. They're going after DuPont again. That's an example of it. Clearly, China is a very risky place to do business. No one's going to be really comfortable about it. The second question...
Is the U.S. a friendly place to do business anymore?
I think the answer is still yes, but obviously people are going to be a lot more cautious. They've seen how we've responded to Russia's invasion of Ukraine. They're seeing how we respond to China. They're seeing how we respond to Europe, the trade deficits with Europe. So it's a tougher place to do business than it used to be. It's not as open-ended. It's not as freewheeling. It's not as friendly. But nonetheless, it's still a great place to do business. It's a big market, lots of opportunity. They can't ignore the U.S.
So I'm going to do some math, just back of the envelope type math. That was a 2-part question, so 10 seconds was the countdown, but it goes to 20 seconds, and since it was a 2-part question, 40 seconds, so we're good. Okay, that's some real back of the envelope math. Do you think it's possible that the government, the U.S. government, as part of a deal with countries, as they negotiate trade deals, forces countries to buy long-dated, say 100-year treasuries with a 0 or 1% coupon as a way to raise capital, because they may not be able to raise as much capital from something like Doge, which they thought they were going to, which recently just took guidance down on how much they thought they were going to raise. Tariffs, clearly, whether reciprocal number is a lot lower than the punitive number that was applied. Could they force foreign governments to buy treasuries as part of a deal, right? We provide the world with security. That's not free.
Yes, but I don't think that's going to happen. We could pressure them into buying some treasuries at artificially low coupons. That's not a high priority. I don't see that really being a key part of any deal.
Okay. Last question. Question number 5. Is the volatility now we've got, say, a 90-day waiting period. Is the volatility, for the most part, over? Has that been pulled out of the market now that we have time to work deals out? What if deals aren't done by 90 days? Do we get back to where we were? Is the water safe for investors where volatility was making them sick?
I think the worst part of it is over. But it's not over by any stretch of the imagination. There's going to be a lot of negotiation. The 90 days can always be extended to 180 days. There are a lot of games that can be played. It'll be tougher negotiating with our trading partners. It's not over by any stretch of the imagination, but the worst part of the volatility, I think, is over.
Last question, bonus question, number 6. Scott Besant, Secretary of the Treasury. His involvement, does that make you feel more comfortable? He's obviously a Wall Street guy.
Yes, and I'd much rather Besant than Navarro. In fact, I would argue that Navarro is clearly coming in second here, and that's a good thing.
Okay, bonus question number 2. Right? Who's more likely to get fired first, Lutnick or Navarro? Go.
Navarro.
Thanks, everybody. 10 seconds. You'll like and subscribe. Right? Like and subscribe below that. Again, I always say it. That's what the marketing people tell me to say. If you like our content, like and subscribe. You'll get more. Thanks, everybody. We'll come back to you when we have it.